Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome to the Risk Intel podcast. Joining me today is Robin Greenlee, Chief Risk Officer at MapleMark Bank. Welcome, Robin.
Thanks, Ed. Good to be here.
Robin, you bring 20 plus years of credit risk leadership experience at your prior bank, which culminated in its successful sale in 2018, at which point then you joined MapleMark Bank, still concentrating on the credit space before pivoting a little bit there into the CRO seat about 2 years ago. So I'm excited to dig into your journey in this series. Our first episode will cover what you went through establishing that risk management program foundation there in the early days at MapleMark. And then our second episode will follow on and talk a little bit about scaling and evolving the risk program. So let's jump right in then and talk a little bit when we start with a bit of context around your arrival at MapleMark Bank. So you walked into a $700 million bank. Take us back to that point, right? What happened when you walked in the door? What did you find? And those early days, what did you encounter at the bank?
Yeah, well, I think one of the bigger challenges was that I walked into a small but very fast-growing young bank, and so there were a couple of things that were advantages and a couple of things that were disadvantages. One is that we were growing very fast, which is great for the bank, but sometimes hard for infrastructure. And so there was a lot that needed to be built out. And my particular role at the time was to help build out the credit administration function and get a lot of that infrastructure in place, since, loans are your biggest asset, and needed to make sure that we had good guards around that door. But on the other side of the situation, we also had a very aggressive growth plan, and knowing that there was a lot of attentiveness to having structures in place or adopting structures early on that would not be typical for a smaller community institution under $1 billion, but knowing that that was kind of the trajectory where we were headed. So we had a strategic plan that kind of set us up to be able to head us in that direction. And we were, in terms of an enterprise-wide holistic approach to managing risk. And as you say, I was really focused on the credit piece and had done a lot of longer-term build-out of a program in a slower growth institution. So I was able to bring what we had already built over a longer period and put it in place quickly. But that then became kind of the blueprint, if you will, for trying to implement similar structures across the other risk management aspects of the bank. So we had sort of a good plan in place. But as we all know, the best laid plans get interrupted by COVIDs and fun things like that. So we somewhere in the midst of life there, we did have some changes in approach that impacted us, as they did everyone. But we're not operating in a vacuum of no activity anyway. So the mid-range, so I've been with the bank a little over 4 years, and after kind of spending a couple of years building the credit area, we lost our chief risk officer to another institution, and so I stepped over, and there was a lot of having to pick up a lot of stuff in a very small organization with a small staff. But one of the pieces that was at least a familiar area, because I had spent time working on the framework for credit, was going ahead and starting to work on applying that across the bank, which was already started. But the fact of the matter was that we found that we had already adopted the SRA platform as our ERN platform, but I found that we had sort of an embarrassment of riches. We had too much stuff in place and too many things that we were trying to manage and monitor. And that did create some challenges for how you get your arms around everything, how you interpret the information that you have. And then when you have substantial events that happen in the marketplace, like a COVID or other issues, how do you make sure that your systems and processes are properly reflecting the change that occurs? And by having too many pieces in the pie, we found that our reporting was very dilute. And this really was a concern. When I, as an example, if you have a pandemic hit and suddenly your risk picture changes substantially, you should see some red flags go off, right? You should see some red lights happen. And everything was just kind of greenish and yellowish, so we weren't seeing enough of a change to reflect the events that are happening. And that was a telling symptom of what could be happening in the rest of the environment. And so that's when we started trying to dig in and peel out some of the pieces. And that's where I think our engagement with SRA did contribute. We have a great trooper in Beth who has been a good helper with us to bring some consultative advice to how we can strip out some of the volume that we've had and help us make some of the decisions on how you do that. Because now we've got all this stuff in there. Which do we take out? What do we have to keep? So there's a lot of decision making in that process.
So there's two themes that you shared there that really struck me. The first was around simplification, and the second perhaps around collaboration. So it sounds like you jumped in and there was a lot of complexity coming out of the gate, and you worked then to peel that back into a simple, easy to digest and utilize a framework as an important kind of first step. And then the second piece around collaboration of, you mentioned Beth, whomever it might be, as someone as a sounding board and to bounce ideas off of. So maybe you could talk a little bit about that simplification process and how you went about doing that.
Yeah, I think that there were some fits and starts about the process of doing that. And we're still working on that. I'm still trying to make some changes, but one of the challenges that I feel like I experienced was different levels of engagement with our team managers. So if you're doing an enterprise-wide framework, you have to deal with risk in different parts of the enterprise that are not necessarily risk managers. You could argue perhaps, and I will, that we all are risk managers to some degree, because we all have blinkers and, taillights on our cars. But we don't all look at our tasks and our main responsibilities necessarily from a risk point of view. So how do we do that effectively, engage with the managers across the enterprise to help work with the reporting function and also the communication function that ERM is supposed to help us facilitate? It's supposed to be a tool to help us both in decision making and reporting. It's not just to generate a report in a bunch of paper. So collaborating with different types of managers within the company, I found that one of the best things I was able to do was to start engaging one-on-one with some of our team members. You have the techies who want to get in the system and mess with everything, and they're just as excited as pie to punch all the buttons and flip all the levers and all of that fun stuff. So you give them a little orientation and put their name on the labels that they need to touch, and off they are.
They take off, right? Yeah.
Going on, exactly. But then you also have, of course, those contributors who would rather die than touch the keyboard if they can help it. And so how do we get their contribution as well? Because we need that. So much of the enterprise risk management framework is qualitative in nature. I mean, we have lots of data, but at the end of the day, we have to bring our judgment to this process. And so I found that simply going in and, meeting with certain of those managers who fit that bill and sort of interviewing them, it's, one of the concepts that I think kind of came late to me in this process, and I hope will be useful for others in this discipline, is that using our platform, whatever tool you use, whether it's a spreadsheet or a platform, is ultimately we're doing a risk assessment and not just generating a report. And I think that's where we kind of get distracted by the bells and whistles. We sort of miss that and forget, sometimes we have to pull ourselves back to basics. We're doing a risk assessment, and that means that we, ask questions and we collaborate on the answers. So collaboration has turned out to be, I think, a really useful approach to this process, and we need a tool to help us do that. And so the determining what questions to answer, what to include, what to exclude, and involving our managers in that conversation instead of just saying, okay, here's your stuff, go fill it out. We also should be mindful of their contribution to even what questions should we be asking in the various disciplines, and not just make one assumption about what those Q&As should be. But the right questions can be extremely valuable, but they're going to change over time, right? So this is a long-term, approach. Risk assessment, it's always changing, it's always growing, and it should also always be edited. One of the best things I think that you can do is remember that all of it at the end of the day is an editing process. And coming up as in college, I did a lot of writing and still do a lot of writing. And one of the biggest challenges for anyone who writes, even if it's just writing technical stuff in our work, is filling a blank page. Starting with the first few words in that blank page is hard for everybody. But you know what? When you have a populated page, almost all of us can edit, and we can contribute our thoughts to how to change what is already there. And so that's kind of what I feel like part of the approach to our frontline managers, particularly, and functional managers, is that the risk team should be approaching them as collaborators, and we bring them information, we bring them stuff that we have available to us. We bring them a populated page, and we say, okay, help me with what stays in, what goes out, help me with the edit. And that's where we get some of our valuable information, because that then invariably will spawn other questions that may give us direction about, okay, those 3 things are meaningless. Let's get rid of those and let's put in these 2 things, because those are the things that really matter. And we get a much better product at the end of the game. But then also we're creating an opportunity for communication on an ongoing basis, so that we can reasonably keep our hand on the pulse of the organization and know what's changing over time, so that you can have a conduit of communication about when things are happening on a routine basis. And because again, we should be prepared to change it. None of it's in stone. We should be prepared to change it on an ongoing basis. So collaboration, I think, is, sometimes it's a challenging, how do you do this? Well, you schedule a meeting and everybody comes to the table and nobody wants to come and do this, and all of those challenges that we face. But instead of that, I sort of took the tack of some one-on-one interviews and engagements that you're able to be brief, you're able to be respectful of their time, but also help them see the value of their contribution to the overall project and the assessment. And then when I finish, I've got part of my risk assessment is formed and completed. And that's really at the end of the day, if I don't keep coming back to the fact that I'm trying to assess risk in the organization, I am going to miss something at the end of the day. We're just populating reports and nobody likes doing busy work.
Well, you said that, right? One of the phrases that you used when we were talking earlier was that using the platform as a conversation starter. And that really struck me as a powerful concept to hear. And you brought up two concepts, and you've talked about one here of using it to facilitate the data capture, the input, the collection process, right, through that one-on-one interview. But that's not the end of it. It's then circling back around with the analysis, the reports, the results, so that the stakeholders then can put that into their decision-making process, right? And then you've created this circle where there is a vested interest to them being at the table, because this is really influencing and impacting the way which they're doing their day job, so to speak.
Right. And it then influences other aspects of our overall program, because as you grow, you start adding more requirements, more controls, more activities that you have to do the larger you get. And this can then become a holistic way of dealing with all of those issues. I just became inspired that if I can, we are going through the process. We're at that stage where we're having to adopt FDICA controls. And so this will be our first year to officially have all of that framework completed and part of our financial reporting process. And in working through that framework, I realized that, each one of those controls is tied to a risk. It's tied to probably a policy. It's tied to a procedure. And this can become a through line that any of these elements that are of high value targets can also be tied to our framework here. And the ones of greatest importance should be flowing together. This should all be one continuous, it shouldn't be FDICA is over here and my SRA platform is here and my risk assessment, all of those things should not be separate. They should be one a big framework, and not, again, it turns it from a task proposal of just getting work done and generating a report to we're building a through line across the entire enterprise that's going to help us long-term with our growth responsibilities and making sure that those are being effectively implemented and managed and tied back to our goals, our policies, and our strategies. So our strategic approach and our policy approach to everything should be, baked into all of this process. And then it bubbles up to a high-level reporting framework of the risk assessment that we end up with at the end of the day. So this should all be one ultimately unified framework, but it comes from all of the pieces and parts of the things that our team members are doing every day. So they have to contribute, and they have to be a part of the discussion. What if I'm asking them for a data point that they don't even have a report for that? Well, is it worth them creating a report for that? Or is it something that doesn't matter in their framework? It's just something we've traditionally had, or we grab that, oh, that one sounds good, and throw that in the framework. So we've, a lot of the deconstruction that I've done in weeding out some of the noise has been around making sure that the things I weed out or replace are tied to what we are actually doing. And does it make sense within our strategy as an organization? Does it, this should inform our success as an organization. It shouldn't be we're often in risk and compliance, we're sort of the traffic cops. We're viewed as the guy on the motorcycle that stops everybody from going forward. And that's not true. What we're actually is the construction guy out on the street in front of you saying, don't go that way. The street is a mess. Go this way.
Yeah, that's a great analogy, and certainly resonates, I imagine, with many of our listeners, that that's the goal, right? Is to be seen as a trusted partner there, and someone that's giving sound advice as to how to accomplish a goal, rather than stopping you from achieving forward progress. Robin, I know there's a lot more for us to talk about in terms of how you've scaled the program. We'll wrap this one here in terms of looking back at how you got the program out of the starting gate. A handful of really interesting themes. I was scribbling down notes as we were going through. Some great nuggets along the way, that we're all risk managers. We all have blinkers and taillights on our cars. I love that observation. But I think that, right, your point of engaging with stakeholders, one-on-one interviews, ultimately you're conducting a risk assessment here, not just generating a report, and getting to the point where those stakeholders are using this output in their decision making, and this really serving as a framework for ongoing conversation. So a lot of great themes. Thank you for sharing those thoughts, and we look forward to having you back for episode 2 shortly.
Awesome. Thank you.